Let's look at the Nikkei index today on the Tokyo Stock Exchange. So first, let's look at the highest level, that is the 3 months or quarterly view. So this one actually gives us a very good picture that the best entry time would have been this lower period. As you can see that if we use the EMA 50 trend lines as well as the EMA 200 period trend lines as a channel, you would see that, or a band, you will see that this is what we call a continuation setup, and the prices have been bouncing between the upper band and the lower band, and it never crossed down the 200 period, the red line, for too long, and then it went back up. So that's a very, very bullish sign in this case. And as you can see, once the uptrend is established, after it has crossed the upper blue band, then it actually took off for quite many years, for almost 12 years. So that's the historical front. And now that if you look at why there is a big drop recently, that's merely because the previous top, which is 1990, we have just reached the point, and therefore this became the resistance. And if you draw a line here, you can see clearly that the price has faced resistance and it is now coming back. So it's actually still a very healthy correction in my view, because the overall trend from a quarterly view, as you can see here, is still trending up. This is only a correction within a smaller degree, such as a weekly view. So now if we drill into this, so we can understand exactly what's happening and what can happen in the near future. So if you look at monthly, you will see that, okay, still dropping, and it has dropped about 0.382 level. And that is because if you draw a line from the recent bottom here to the top, and that's where it was. And if you go to the weekly view, you can see that actually we should go to daily view to make it sharper. You can see that I believe this is only a Elliot wave A wave. That means it's 1, 2, 3, 4, 5. It's A wave. Now it's bouncing back for a B wave. So it roughly stop here. And then there will be another wave, that is C wave, that will come down here. And then it will finish the correction here. And once it finishes the ABC wave correction here, then it should come back up and resume the previous longer trend. So in this case, as you can see here, this bounce, again, in my view, based on Elliott wave analysis, is only a B wave bounce back, and there is still a third wave, that is C wave, that would come down and may bring the price point to even below the previous low, that was 31,212. So it could come down around this area. And if you look at the weekly view, I believe it will go down this area. That is, you can see also the concentration here. So that would also act as a support, and it's probably a previous force wave as well. So usually it would end up at the previous force wave angle. So the C wave would end up, I think Nikkei is going to have another correction. It's going to go down to about 27,000 price point. But after that, it should not go down even further. So it's still very positive from a longer term view, and it will go up, back up again, and it will come back to this historical high, and it will go even higher. But that's after it has dropped to the 26,500 point level. So yeah, so that's a quick view, and you can also see that here. Additionally, the EMA 50 blue line has now acted as also as a support. That's why once it reaches this upper band, it actually bounced back. But I don't think this is going to be the last resistance. Is still going to come back down here, and then it will go back up. So this is the view about the Nikkei.